As the year goes on, we might see some opportunities for companies to go public without an offering, as both bankers and companies combined become a little more comfortable with the new valuations because of the higher interest rate environment that we've been dealing with.
Joining me today is Ron Bohlert, Director of Real Estate with the New York Stock Exchange. Ron, thanks so much for joining us again.
Thank you, Matt. It's always a pleasure being here.
So with about a quarter of 24 in the books, how would you describe the overall market compared to the REIT space?
So when you're looking at the broader market, most people turn to the S&P, which is up about 8% year to date. But in looking at the S&P, it's a makeup of 11 different GICS sectors. The two heavily weighted sectors, information technology, consumer services, are both up about 12% year to date. And a larger chunk of those gains are just a handful of very heavily weighted stocks. On the flip side of the coin, we do have the real estate sector, which is down 3%, as well as utilities, which are down about 1% year to date. Not all that surprising, seeing as they're both yield-based instruments for the most part, so they're seeing a little bit of pressure. Another good indicator of the market performance, though, that I like to look at is the Russell 2000. And now that index is just about flat year to date. By and large, that encompasses a lot of our small and mid-cap names and also gives another good indicator on the health of the broader market. So relatively flat, real estate underperforming the broader markets as a whole, but fairly quiet start to the year.
And what expectations do you have for a potential uptick in REIT IPOs, and what factors could drive that?
In looking at the data that we just talked about, it's not all that surprising. We have not seen a tremendous amount of IPO activity in the REIT space so far this year. We did have one REIT listing, not a traditional IPO. And I do think that as the year goes on, we might see some opportunities for companies to go public without an offering, as both bankers and companies combined become a little more comfortable with the new valuations because of the higher interest rate environment that we've been dealing with.
And speaking of rates, looking at the year ahead, what are your expectations, and what impact do you think it's going to have on the market?
So as of this morning, the market is pricing in a 60% chance of a rate cut in June, and they're looking at about 70 basis points worth of cuts by year end. This is very different than what we saw just a couple of months ago, where there was a 100% chance of a rate cut this week, which is now down to a 0% chance. I personally feel like the Fed and Fed Chair Jay Powell are going to remain very cautious, data dependent. I do not think they're going to cut rates before the year end, largely because the data and some of the things that they're doing right now to tame inflation a little bit are starting to take effect, and it might be premature to try to preempt that and cut rates and maybe undo some of the good work they've already done.
And finally, the NYSE and Nareit will once again be teaming up to host the REIT IR Symposium in June in conjunction with REIT Week. What should attendees expect at this year's event?
So we're really excited. This is our 8th consecutive year partnering with Nareit to bring this event forward. It will take place on June 3rd, which again, as you noted, coincides very nicely with REIT Week. And for those who aren't familiar with the event, it's a way for us to bring together REIT professionals for an afternoon of discussions, talking about things that impact their day-to-day lives in the REIT world. And in addition to the panel discussions, we incorporate a healthy amount of time for networking. And that's really important for these REIT professionals to get together and talk about best practices, challenges, opportunities, but more importantly, to build those lasting relationships with industry professionals.